It's time for Declare Your Independence with Ernest Hancock.
Believe me when I say we have a difficult time ahead of us. But if we are to be prepared for it, we must first shed our fear of it. I stand here without fear because I remember that I am here not because of the path that lies before me, but because of the path that lies behind me. I remember that for 100 years we have fought these machines. And after a century of war, I remember that which matters most. We are still here! Tonight, let us make them remember we are not afraid!
Welcome back to Declare Your Independence with me, Ernest Hancock, here in Phoenix, Arizona, from the beautiful studios of Freedoms with an S, freedomsphoenix.com. We need to get caught up on a lot of stuff. I mean, we spent a lot of time on this over the years and so on, but I mean, a lot of things are happening. Dominoes are falling, and I need somebody that can help us out. Mish Shedlock. Go to his website, globaleconomicanalysis.blogspot.com. And all you got to do is or Sitka Pacific. The easiest way to do it is just put in Mish, M-I-S-H, Shedlock into your Google browser. He'll explode all over the place. I got you there, Mish?
Yes, you do. Actually, the easy way, just do a Google search for Mish, M-I-S-H, take you straight to my blog. I talk about all these things that are happening. My God, you know, the whole world seems to be blowing up here, and the stock market for now is ignoring it. Got happenings in Spain, huge protests in Spain. The mainstream media is not even covering this thing yet. Of course, we got the ongoing crisis in Greece and the deal with the IMF. You have problems in California back home, and we got huge cracks in the global recovery thesis all across the world. So, my gosh, what do you want to talk about?
You know, the end is nigh, man. The end is nigh. You know, the biggest thing that really I've been waiting for it to become, I mean, we knew this was coming, you know, that China was going to start divesting itself of our debt. And I'm looking at what's going on in Africa and Libya, and it seems like we're going toe-to-toe with China, and we want to get into a slap fight with them. And I'm wondering what are their options, and what kind of steps are they taking now?
Well, I think a lot of this stuff about China dumping treasuries, once again, is hype. All that's really happened is the Fed has been, monetizing the debt, as everyone knows. I think China's just, taking advantage of a little bit of that. The treasuries buying will unload from them. I think that will reverse once again once QE2 stops. I think it will stop. The real question is for how long. I think for longer than some people realize, unless Bernanke explicitly wants to ignite another boom here in oil, which I kind of doubt. So I think they'll hold off for a while. But the underlying economic fundamentals are really deteriorating. You look inside the latest jobs report. They claim that 244,000 jobs were created. Well, yet they brag about the unemployment rate, falling from 10.1 down to 8.8. Well, actually, last month it rose up to 9. But if you look inside those numbers, there's millions and millions of people that are out of the workforce, and they're not counting them at all. And you can't play this both ways. You can't say, well, okay, I like the job survey, so we're going to tout 244,000 jobs. You at the same time tout the unemployment rate falling, and then all of a sudden, out of the blue, ignore it when that particular number turns bad. But I think the real U3 unemployment rate is probably close to 11%. And of course, if you factor in all the part-time people, and the like, you're up to an unemployment rate of closer to 19. But the big thing here is the services ISM number was disappointing last month. 73 out of 73 economists overestimated what the ISM survey would show. All of them got it wrong. And the same thing now is happening in Germany and France. Industrial production unexpectedly dropped in Germany, unexpectedly dropped in France. Well, China's slowing too, and we've got a regime change coming up there next year. And if they start tackling inflation, and I think if they don't, the market's going to force them to, China's at the risk of overheating. In fact, China is overheating. The question is, how far does it go?
This is one thing that I want to bring. You say all these government numbers that they keep referring to and so on. And you and I remember when they the cost of living or inflation index, they took off, I don't know, housing, food, fuel, everything you need to keep breathing in and out. And I didn't think that I would ever see what I saw. It was just less than 2 weeks ago, I saw Howard Dean on some talking head, cable news, whatever, and they were going on about, we don't have inflation. We don't have inflation. We really don't. We don't have inflation. Somebody came out and said, yeah, but it is if you include, food and fuel and all the stuff you guys took off of the index that you were using to determine inflation. And he goes, well, that's not how we calculate it anymore. And I'm going, wow, these guys are snake oil selling anything but reality.
Well, they exclude or include whatever they want. I mean, take housing.
Well, that's my point.
The housing prices used to be in the CPI, and they took them out for owner's equivalent rent. And for people who don't know what owner's equivalent rent is, they actually do a survey. They ask people how much it would cost to rent their house if they rented their house from themselves. Seriously, they ask people how much they would pay to rent their own house. That's what goes into the number. And so they ignored massive, and this is what got both Greenspan and Bernanke in trouble. They ignored these huge run-up in home prices. If it didn't, that's not inflation. That's an asset. That's a capital investment. We don't count those. But what I've been saying is, okay, the Fed really blew it. They should have had home prices in there, and then we would have seen we would have seen inflation close to 10%. But on the other hand, if it was in there, with home prices falling now, we would see the reverse. We would see a lower CPI. But what we do is we ignore it one way, and when that suits our purpose, we ignore it the other way when that suits our purpose. Okay, so now, everything's fine and rosy.
Now we have a perfect example is CNBC is the perfect cheerleader. I mean, that's all that's going on there.
Yeah.
Now I'm looking at these guys, and they're the perfect cheer. Look at all these positive things today. We got a positive. There is sunshine somewhere in the country today. Now they'll ignore, the floods and everything everywhere else, but they're always the positive until it hits, precious metals or something. Then it's a bubble and all this other stuff. So I'm going, all right. Who is it that is so convinced by this that it has a reflection in the stock market? Or it has a reflection in people putting all their money into, bubbling up in market funds or pensions, or I'm just, and then you have Geithner going after the federal employee's pension to paste over this exceeding the debt limit, and that's like not noticed by anybody hardly. I'm like, who is controlling the stock market staying? I mean, is it inflated dollars? Are we looking for a big giant correction someday? Where are we at?
Oh, yes, we're looking for a giant correction. All it is just a function of sentiment. What we're seeing is actually, I don't see that there's that much inflation. Again, I'm measuring it from a credit standpoint, not from a price standpoint. From a credit standpoint, we've had falling credit for the last 2 years. And but what the Fed has managed to do is reignite the corporate bond market, so we've got a bubble in junk bonds. They've reignited speculation in all kinds of commodities, oil, silver, just massive speculation in their open interest. So then, rather than attack the real problem, which is all the monetary inflation from the Fed, it's monetary but not credit inflation. Notice notice I'm making a distinction here.
The real problem, they're going to push the button on us, Mish, so you got to hold on right there. We're going to find out the real problem from Mish Shedlock in just a little bit. We'll be right back.